Welcome and thank you for watching this video. Today I am going to share the origin story of mortgage processing, and hopefully you will learn how the job of the processor went from simple deeds to mission-critical specialists. The word mortgage comes from Old French mort, dead, engage, pledge. It meant a dead pledge. In early England, landowners borrowed against the states with simple deeds, lender, borrower, and a signature. No formal processors required. The pledge died when the loan was repaid, or if the borrower defaulted. Everything was simple, clear, and handled locally as well as manually. Then mortgages crossed the Atlantic and evolved with a new context in America. After the Homestead Act, banks began lending to farmers and families. Mortgages went mainstream in the U.S. Urbanization and housing booms increased demand for standardized loans and more paperwork. Clerks began verifying deeds and income, often by employer letters, doing what we now call processing. These informal processors kept loans moving in a manual, localized system. The Great Depression nearly collapsed housing finance. The government stepped in to stabilize lending. FHA in 1934 and Fannie Mae in 1938 created consistent documentation and underwriting standards. Lenders now needed files prepared the same way every time, someone to collect pay stubs, verify assets, and calculate ratios. That need officially shaped the mortgage processor role, prepping files for underwriters. By the 1970s, mortgage guidelines standardized with Fannie, Freddie, and Ginnie Mae. Loan volume surged. The loan processor became an official job, no longer an informal clerk. Gather borrower documents, pay stubs, bank statements, IDs. Accurate file naming and secure uploads keep files audit ready. Order appraisals to verify property value. Pull credit reports and log authorizations, critical for underwriting. Communicate between borrowers, loan officers, and underwriters to keep files moving. Processors are the engine room of loan production. In the 2000s, digital systems sped up processing by using automated underwriting systems, online credit, e-disclosures. But after 2008, regulations like Dodd-Frank and other laws added stricter disclosure timing and compliance duties. Today's processors balance customer service, data accuracy, compliance law, and investor requirements. No longer paper pushers, they're mission-critical specialists in loan production. Why processing exists: lenders needed consistency to reduce risk and sell loans. Borrowers needed clarity about payments and terms. And government-required compliance to protect homeowners and stabilize housing. Processors are the bridge between dreams and dollars. Think of yourselves as detectives, guardians, and magicians. Detectives who gather facts, guardians who enforce rules, and magicians who turn paperwork into approved keys. That's you, the processor. You keep homes happening, compliance tight, and dreams funded. At Capital City Mortgage, we know the value of expert processing in every loan we fund. We support a range of loan products from FHA and VA to investor and construction loans. Are you interested in becoming a mortgage processor? We have the training resources available for you at Capital City Mortgage, where we are funding dreams of homeownership. Thanks for watching.